Hey everybody, welcome back to the channel, James RULEXRP. Follow me on Twitter at RULEXRP. This is for entertainment purposes only. I'm not a financial advisor. I am finally getting my voice back. I went and saw the doctor and he gave me some amoxicillin and some other antibiotics and they are working. Hooray! Happy Friday. Welcome to Friday. I hope everyone has a safe weekend coming up. All right, let's get into this. Bloomberg Law released this article this morning, Friday, and I'm going to cover it word for word. It is an exciting article. It was written by Lydia Bioud, FinTech and RegTech reporter for Bloomberg Law. Crypto safekeeping likely to drive Bank-Fintech partnerships. July 31st, 2020, 5:30 a.m. National banks likely to partner with crypto custody providers. OCC decision could move the needle for similar FDIC guidance. The Trump administration's green light for national banks to offer custody services for cryptocurrency will likely drive a new wave of financial technology partnerships to tackle significant cybersecurity and operational challenges. In a recent letter, the Office of the Comptroller of the Currency, or the OCC, called virtual currency custody, including safekeeping, settlement, and reporting, a modern form of traditional banking activities. The agency's July 22nd announcement is the latest move by acting Comptroller of the Currency Brian Brooks, formerly top lawyer at Coinbase Inc., to help the crypto industry integrate into banking's mainstream. Come on, baby. Collaborations are most likely to occur via partnerships or white label services branded under a bank's name, but actually provided by a crypto custody company, says Kerry Larson, partner at Perkins Coie LLP in New York. Banks also may acquire crypto custody providers, she said. The door's just been opened for funds, institutional players, and investment advisors to expand their relationship to crypto, Larson said. There are a number of regulatory considerations that still need to be addressed for Bitcoin and Ethereum to be listed alongside stocks and bonds on a bank's customer's monthly statement, practitioners and industry executives said. Keeping cryptographic keys to digital assets secure from hacking, theft, fraud, or loss would be chief among those requirements. There's a reason custody has emerged as its own segment of the crypto industry. Safely storing digital assets is very hard to do, said Jake Chervinsky, general counsel of Compound Labs, Inc., a San Francisco-based cryptocurrency company. OCC sees demand. The OCC's interpretive letter didn't specify that cybersecurity measures banks should take to safeguard crypto keys, but said risk management procedures should take account of the different technical characteristics of various crypto assets. The agency also said banks should consult with their OCC supervisors before offering crypto custody services. The agency's decision to allow banks to hold crypto is a recognition that tens of millions of Americans are invested in this asset, Brooks said Thursday at a virtual conference hosted by the American Bankers Association. The OCC has received questions from a number of banks about holding digital assets, which are owned by an estimated 30 to 40 million Americans, he said. Banks will first need to assess whether there's enough customer demand to justify the operational and compliance costs that go along with custodial services, Chervinsky said. These stakes are high, too. A single mistake can result in customers' funds being lost forever, he said. Crypto companies like Coinbase that offer a full suite of custody services to customers, including handling fiat currency, must obtain money transmitter licenses on a state-by-state basis. New York regulated crypto companies must meet requirements to securely store digital assets, such as holding the same type of amount of virtual currency obligated to a customer. There are also cybersecurity requirements to protect customer data, confidentiality, and detect attempts to hack into accounts. Crypto companies that already hold a trust company charter or a BIT license from New York's Department of Financial Services are likely to have a leg up in working with banks on custody services that can meet the OCC's regulatory and supervisory requirements for custody services, said Kerry Larson, partner at Perkins Coie LLP in New York. Less risk. The OCC's move should also make it easier for crypto companies to get bank accounts and other bank services. Many banks have viewed cryptocurrency companies as high-risk customers due to anti-money laundering and Bank Secrecy Act compliance concerns. I'm hoping this lowers the perceived riskiness for banks to offer crypto to crypto firm, says Charles Cascarilla, Chief Executive Officer of Paxos, a cryptocurrency trust company. You need to have bank accounts in order to be in the financial system. National banks aren't the only ones who may want into bank crypto. State charter banks, particularly challenger banks that have positioned themselves as service providers to the fintech industry, are likely to ask the Federal Deposit Insurance Corp, the FDIC, to take similar action as the OCC, said Peter Luce, partner at Kestel PLLC based in Washington. Without the FDIC's blessing, smaller banks are reluctant to deal with the uncertainty that comes with supporting crypto custody and wallet services, Luce said. It would not surprise me if the FDIC hasn't already received opinion letter requests from state banks, he said. There aren't new issues. For years, all the real action and crypto innovation in banking has been at the same level. The national banks are late to the party, Luce said, or added. States in the lead. The time and effort required for large national banks to scale up crypto holding services meet OCC requirements means that states like New York will continue to lead in regulations, said Gary DeWall, special counsel at Catton Muchin Rosenman LLP in New York. The states are going to force you into the ballpark for the time being, he said. State regulators see themselves as keeping better pace with the changing financial landscape. And it isn't just big financial markets like New York. Wyoming already has 2 applications for its Special Purpose Depository Institution SPDI charter, enacted in 2019, intended for cryptocurrencies to provide custody services, Wyoming Division of Banking Commissioner Albert Fortner said by email. I could see these institutions fully operational in providing digital asset custody services to a large number of clients. But most national banks have the complete regulatory approvals necessary to launch their own services, he added. Here we go, people. Adoption of cryptocurrency in the U.S., in the banks, everywhere. Get ready. If you're new to this, congratulations. If you have just recently purchased cryptocurrency, congratulations. You are at the right place at the right time. As I stated before, I'm not a financial advisor. This is for entertainment purposes only. But as we see this news hit the mainstream daily, hits the internet, Digital Asset Investor posted a video this morning, and I have said the same thing. I have yet to see NBC, CBS, Fox, CNN actually showed the news that the OCC has regulated banks to custody crypto. I have not seen it. If you've seen it on the bank or if you've seen a clip in the news, in the major news, put it in the description of this video. I want to see it. But anyway, as I say in every video, please do your own research. If you're new to the crypto space, even if you've been here for years, do your research on different cryptocurrencies. That is the key to great investments in cryptocurrency, is researching these investments before you make the purchase. My name is James RULEXRP. Follow me on Twitter at RULEXRP. Have a great rest of your Friday and have a safe weekend. We'll see you soon. Take care.